We've built our entire civilization on one assumption, that money works. That these printed pieces of paper, or worse, digital numbers on a screen, actually mean something. But what if they don't? What if the system that supports your savings, your salary, your retirement, your rent, your food, collapses in a single moment? What if money simply dies? Because history reveals something we conveniently ignore. Money doesn't just lose value. Sometimes it stops working altogether. And when that happens, a terrifying question emerges. If money dies, what still holds power? Stay with me, because to answer that question, we must go back deep into the rise and fall of economies that believed they were invincible, right up until the moment they weren't. And the answer, I promise you, is not what most people think. Every monetary system, from ancient gold coins to modern digital banking, is built on a hidden ingredient. Not gold, not government authority, not central banks, but belief. The belief that tomorrow your money will still have value. But here's the twist. History shows that belief can disappear suddenly, violently, and unpredictably. To understand this, we must rewind to 3 key moments when entire nations watched their money die. The origins of these collapses weren't chaotic explosions. They were slow burns, and the same signals are repeating today. Montage, printing presses, war spending, political speeches. Collapsing money doesn't start with panic. It starts with good intentions. Governments face crises, a war they can't afford, a debt they can't pay, an economy they must stimulate, a political promise they must fulfill. And the solution always looks harmless. Let's just print more money. It's subtle at first. A little money here, a little emergency spending there. No one notices the early decay. But pressure builds underneath the system like cracks forming beneath a dam. Let's explore the chronology. Case Study 1, Weimar Germany, the illusion of prosperity in 1919. Germany was desperate, crushed by war debts, the economy shattered, political violence everywhere. The government printed money to fix things. At first, people felt richer. Wages rose. Businesses boomed. The stock market surged. Everyone celebrated. But something invisible was happening. The money supply was doubling, then tripling, then exploding. The illusion of wealth hid the rotting foundation. This pattern repeats again and again. More money gives short-term boom, gives long-term collapse. Just like a drug that gives temporary energy while destroying the body slowly. Case Study 2, Zimbabwe, the new millionaires in the early 2000s. Zimbabwe promised rapid development. To fund new programs, it printed money aggressively. People woke up as millionaires and soon as billionaires. But they were becoming richer only on paper. One man famously needed an entire backpack of cash just to buy bread. Shops refused cash entirely. People bartered fuel, sugar, even clothing. Money still existed, but its power didn't. Case Study 3, Venezuela, the sudden turn. Venezuela was once one of the richest countries in Latin America. Then global oil prices fell, political chaos rose, and the government printed money to help the poor. But printing money can't create real wealth. It only dilutes what already exists. Soon, prices doubled every few weeks. Salaries became worthless. Families carried stacks of bills to buy rice. Crime skyrocketed. Millions fled the country. Money was still there, but it no longer held power. Pattern so far: every collapse begins with optimism. Every collapse is caused by the same feedback loop. Every collapse ends when money loses trust faster than governments can print it. But then comes the breaking point. Sound cue, deep rumble, cracks forming. There's always a moment, a single spark that triggers the death of money. Not a spark from politicians, not a spark from economists, but a spark from the people. Because money dies the moment people stop believing in it. For Weimar Germany, it was when people demanded wages twice a day because the morning salary became worthless by evening. For Zimbabwe, it was when shopkeepers refused to accept the national currency. For Venezuela, it was when people realized a month's paycheck couldn't buy a chicken. The breaking point looks like this. Savings vanish, prices explode, banks panic. People rush to buy anything tangible. Trust collapses once the psychological foundation breaks. The financial collapse follows instantly, because money dies not from printing, but from panic. This is the heart of the video. This is where the truth gets uncomfortable. When money dies, the things that retain real power are rarely the things we expect. Let's break it down. 1. Hard assets become kings. People turn to whatever can't be printed. Land, livestock, precious metals, tools, machinery, useful equipment. In Weimar Germany, farmers became richer than bankers. Not because they had money, but because they produced food. 2. Skills become a new currency during every collapse. Anyone with medical skills, repair skills, construction skills, food production skills, transportation skills, security skills, became more valuable than those with university degrees. Cash becomes meaningless, but the ability to solve a problem or provide a service becomes priceless. 3. Networks outperform savings. Connections can get food, shelter, protection, opportunities, insider information. In collapsing economies, who you know matters far more than what you own. Money dies, but relationships keep people alive. 4. Power shifts to those controlling scarce resources, those who control. Food distribution, fuel supply, transportation, water, medicine, electricity gain enormous leverage. During Venezuela's collapse, black market food distributors had more power than government officials. 5. Alternative currencies emerge instantly. Human beings always create new mediums of exchange. Cigarettes, World War II prisons, fuel vouchers, stable foreign currencies, gold or silver, digital currencies, mobile minutes, Africa food packets. People will always find a way to trade, even when official money dies. 6. The black market becomes the real market in every monetary collapse. Official markets freeze, prices become chaotic. Shelves empty, regulations fail, but the underground economy thrives. The government collapses, the street economy replaces it. Here's the tragic part. Once money loses trust, governments try everything. Price controls, currency, redenomination, bank freezes, new banknotes, changing interest rates, cracking down on markets, introducing digital controls, but none of these solve the real problem. Why? Because you can print money, but you cannot print trust. Once trust dies, it almost never comes back. Governments can slow the collapse, they cannot reverse it. Now here's where things get uncomfortable. The past isn't staying in the past. The same warning signs appear again today. Rapid money printing, exploding government debt, rising inflation, declining currency, strength falling, purchasing power, widening wealth gaps, central bank bailouts, record levels of household debt. In 2022-2023 alone, major global economies printed more money than the previous 50 years combined. The US used to take decades to add $1 trillion in debt. Now it adds $1 trillion every few months. Japan's money supply has nearly doubled since 2012. Europe is experiencing the highest inflation in decades. Countries like Argentina, Turkey, Lebanon, and Nigeria are already on the edge. And here's the chilling part. No country in history has printed. 1. Money is created. 2. Money becomes abundant. 3. Money becomes worthless. 4. People return to things with intrinsic or functional value. Civilizations rise and fall on this simple truth. When money dies, humans don't disappear. Economies don't vanish. People don't stop trading. Instead, value migrates from paper to essentials, to skills, to relationships, to scarcity, to stability. Money dies, but power always survives. It just shifts. So after all this, let's answer the core question. When money dies, what still holds power? Not wealth, not political speeches, not bank accounts, but the three things that have outlived every collapsed currency in history. 1. Tangible value, anything useful, anything scarce, anything necessary for survival. This includes food, land, metals, energy, tools, shelter, transportation. Tangible value never goes to zero. 2. Practical skills, skills that solve problems become currency. Medical, mechanical, agricultural, logistical, repair. Construction, communication, security. In every collapse, the most valuable people are those who can keep society functioning. 3. Strong community networks, family, friends, neighbors, trusted connections. The strongest currency in a crisis is a reliable network, because communities can share resources, protect each other, trade fairly, distribute essentials, provide opportunities. When money dies, humans survive because humans cooperate. 3 final takeaways. Takeaway number 1. Money is not wealth. Wealth is what money represents, not money itself. Real wealth is value, not paper. Takeaway number 2. Trust is the foundation of every currency. Once trust is gone, the currency collapses faster than any policy can fix it. Takeaway number 3. Power moves to what cannot be printed. Skills, resources, relationships, and tangible assets outlast every monetary system. Money is one of the greatest inventions in human history, but it's also one of the most fragile. Every empire believed their currency was unbreakable, until it broke. Every society believed collapse could never happen here, until it did. Every generation believed they were safe, until they weren't. So ask yourself, if money died tomorrow, what value would you still hold? What skills, what resources, what relationships, what power? Because history tells us one painful truth: money doesn't last, but value does. If you found this breakdown valuable, if it opened your eyes even a little, do me a favor, like the video, share it with someone who needs to hear this, and subscribe for more deep dives into the systems shaping your financial future. Because understanding this isn't just knowledge, it's preparation, and preparation is power.